Hi everyone, welcome back. So on our previous video we have seen the crazy pump that was caused by this black box right there, by these two candles, and we have seen how we pyramid, not really pyramid, but we added on positions. We added buy and we bought again and we bought again, otherwise there. Okay, but there was a sale and we lost it. There was one sale and we lost. Okay, but the others went crazy. It went crazy. So, and as you can see, finally the price from our entry that is the lowest. That is the lowest point that you can possibly get. Look, this is crazy, a crazy pump. Almost, I don't know, 300, 400 pips or something like that. It's a crazy pump, look at that. 20 pieces right there, and look what the price did. The price just melted. And then that is what we discussed on the previous video. So now let us go to the next one. Okay, as you can see, what do you see here? Simple. 1, 2, 3. Did we break the black box? No. No, why? Because as you can see, 1, 2, 3, we didn't break it. 0.5% still intact. So we're gonna wait. Then 1, 2, this one broke, of course it did. But is that a sell? A sell. Stop loss. Stop loss is up there. That's a sell. And almost immediately the market changed keys and changed direction. Moving to the upside, hitting our stop loss upside. What is the time now? The time is buy time. Why? The algorithm just changed it from sell to a buy. So we're gonna continue where it is going. Okay. Alright, so that is typically what occurs around here. Stop hunt or something like shakeouts will happen, and after that, because that this delivery that is insane. It is insane amount of tips to upside. So as you can see, after that, after entering a buy, when you measure the bodies to bid will be at your entry level. What does that signify? It means that you're not gonna take partials over there. Why? Because you just entered. How do you take partial? So you're gonna wait for TP3 to be hit. TP3, okay. At TP3, you take your 30% off, right? Then you let other. So then after this 30 candle has closed the trading, has finished trading, what you're gonna do now, you're gonna measure from the up to the bottom of the 3 candles, and you're gonna determine your TP2, which is found, TP3 is found upside. What happens? Then this thing pumped to the upside. Okay, and then our buy position is now soaring, and then we take partials another 30%, right? Then at TP3 another 30%. After TP3, what you're gonna do is, after TP3 has been hit and the price has left the TP3 area, you're gonna put your stop loss at entry level. Okay, at entry level. at an entry at your entry price. Okay. And then the market found a lot. So the trail you put it at when it hit it before. What does that mean? It is time to put it at TP2. Okay, yeah, it's at TP2. It's at TP2. Okay, so as you can see, a lot of distance from 1% down there, and then the market changed direction and it came really down here. Okay, then that is really good pump. If you measure up there, that is TP4. That is okay. So yeah, that typically has typically it has not after the price has left typically that you're gonna put your stop loss at TP. Okay, after hitting TP4 the price and move the upside or the downside, we're gonna put that TP3. Okay. So that we don't miss profit. So you already need it as your own, so you gotta keep. Then along this way it made another block. 1, 2, 3, right? And then this thing broke. Now there said stop loss. Up there. Look at the risk. The risk is huge. Right? There is a huge risk, right? What does that mean? That means I am not, most likely I'm not gonna enter this trade. Okay, I'm not gonna enter this trade. Essentially, what's the model happened? Look, we first we bought, then we sold, then finally we pumped. Sorry guys, so we pumped the upside. That therefore the model is essentially. So, anyways, this think first bought, which means I am buying up here and my stop loss down there. That's my risk. My risk is very huge. It is very huge. So these kinds of setups, you want to run away from. Run away. Don't do it. Only trade the retests, okay? The third model, the second one. Okay. Only trade the retests. Then what happened? So as this same thing that I told you. So actually measure the bodies. To the upside it didn't hit it, but to the downside they did hit it. So they did hit it. So there is no black box anymore. Okay, because it has already finished its trading. It hit its objective down there, so there is no black box anymore. And this one is done. This one is done. And then we're gonna wait for the next one. Is there any other black box? Yes. This big, this big body, and then that pink or spinning. After that, what does the price do? So you already know we're not gonna enter a trade based on this. As you can see, this much risk, no one is gonna involve himself on this nasty, huge stop loss. No, thank you. So what I'm gonna do is I'm gonna use it as a directional indicator. Why am I selecting this as a black box. Why is this candle a black box? It's because this traded up fully. As you can see, this next candle traded up fully off the full candle, and then the wick too. If there was no wick, then there was no black box. But as you can see, the wick, even the wick overlapped the point, and then the next candle's wick even went down to half, 50%. We only need 26%, but it really went 50%. It was generous, really generous. That makes it a black box. Okay, so we're going to measure that. TP we broke, so downside where? Down there maybe. Down there is no see. It didn't break right here, but if you look at we will see that it did. So anyways, so you're gonna measure this and you're gonna project the downside TP1, TP2, TP3 downside to the upside TP1, then it continues. Okay, then we wait for new black boxes inside this black box. Okay, then what do we do? 1, 2, 3. Did it break? No. 1, 2, 3. Did it break? No. 1, 2, 3. Did it break? No. Then the third one broke, right? That's a safe stop loss up there. Okay. That's the same. Then another black box. 1, 2, 3. Did it break? No. 1, 2, 3. Did it break? No. Why it didn't move a lot as a question. We are still in a sell position with this one. But here there is no trade. Then this front, this is definitely a sell down there. So the price, this price consolidation is just before that big down. Okay. Oh my gosh. So we started selling down there from here. Then another sale. This one is preparing for that big down. Just stop at. Where is it? Let me show you for our casted. This one. This big down. So this was what we have seen now, just now. As you can see. That's a sale. That's I told you sale. That's a sale. Retest sale. We have 3 sales and we have 1 sale from previous. It's not seen here, but 4 sales. We have 4 sales in. Look, great. So it's just great. So it was preparing for down. So let's finish the next one. What is this? I'm showing you this to show you how powerful, how important TP2 and TP3 are. This is a black box. Huge. I'm using the bodies. So you can see TP2, TP3. Look at that. Okay. So when you find these kinds of things, you are in big money. You're gonna make a huge money. You will make a huge money. Okay. That's your target. You put a red line just like this one. You want the price to gravitate to there, to that area, just like it did. It slowly build up, and finally pumped. So I am very sure that there is a lot of black boxes here. Buy, sell, buy, sell, and then buy down there. Buy. Not a lot of black boxes that lead to the TP2, which we are interested in this one, and even TP3. Look what the price did after TP3. It is not a coincidence, bro. This is not a coincidence. This is deliberate, intentional, deliberate. It is intentional. It is intentional. It's just crazy. So let us go to our next setup. What do we have here? We have a black box where 1, 2, and 3, right? Did we break? No. Then another 1, 2, 3, right? Did we break? Yes. What do? You see? Stop loss above 0. Your risk is this one. Your reward potential will be down 0. Okay. Then what happened? As soon as you enter the trade, it went to a little bit profit, and then finally reverse direction hit your stop loss up. What are you gonna do now? I'm gonna buy it. Stop loss down there. I'm gonna buy it again. I'm gonna buy it. Then I will determine the TP by using the bodies. TP1, TP2, TP3. Just like this. Then I will take my partial at TP2, TP3, and then after the price has moved above TP3, I'm gonna put my stop loss to on TP2 at TP2. Okay. Alright. So in a sense, this is something like the certain real. So you can see a little fake out, and then finally complete back. I told you most of the time we will have these kinds of hands, stop hands, before pumping, or before dancing. Anyways, then what happened here? Now what happened? This thing, before hitting TP2, it crashed. What does that mean? It is gonna be beautiful. This is a black box. It is gonna be beautiful. Focus down there, another buy wire. It really came to the golden zone, but we can't buy up there. As you can see, most of the price is reacting based off this level. As you can see, 1, 2, 3, 4, 5, 6. Most of the price is reacting based off of this black box. Didn't enter below it. Only this retest came down. As you can see, came down to the golden zone. This is a golden zone. The area between the stop loss, your stop loss, and the black box is called the golden zone. And this is the silver zone. The area where the black box is found. Actually, the body of the black box is found. That is the silver zone. That's where most prices retrace or bounce off. So we're going to use those as an entry if TP2 is not hit. So in the first place. Another buy. So a lot of positions here. Buy. Then after buying here and after buying there, and we had another black box where is 2, 3, sell. Stop loss up here. Take profit, measure the bodies, they are almost full bodied. Measure the bodies, take your partials at TP3. If TP3 is not hit, don't touch nothing. Okay. Then finally, after hitting TP2, TP3 is not hit actually. Most likely TP3 was not hit. So the price reversed direction. It didn't make any other black box, as you can see. Change direction and finally hit our stop loss, but we already bought here and there, so we are in a good position now. So we delivered the TP2 for this one, and for this one, not yet. We are in a buy program. What does that mean? It means this black boxes TP is gonna be TP1, TP5, and TP3 is upside. It's gonna be like this. I'm telling you, this is gonna be like this. Then our TP2 is upside. We entered a trade based off of this black box and took partials at TP2. Then we found an opportunity of a hit or an efficient black box, and we're gonna ride the market upside. Okay, giving us more profit. Then what happened here? Another black box formed. 2, 3. Did it break anything? No. Then before breaking, it formed another 2, 2 and 3 as well. Actually it broke. Where? We measure the body of this. It broke it above there. What does that? Any attempt to move down? Our black box is found down there. Any attempt to move down is just a buying opportunity. We already know the algorithm is gonna seek higher prices. We're gonna move to the higher price. Okay. So when it comes back, I'm gonna buy, not upside one, because it's not gonna be worth it, as you can see. I'm not gonna risk that much. I will only risk this entry there, and then stop loss, down there. Why? That's the low right there. That's the lowest low of the 3 candles. As you can see, look at that. That is respectable. That's respectable. It got respected. So as you can see, the market that just went through blue passed down, silver zone, and went to golden zone. So if you want at that time, you can enter another position. Why? Because it is worth it. Why? Your stop loss is gonna be right there. It's not gonna move anywhere, and your entry is gonna be right there. As you can see, is this a risk? No, it's not a risk. It is almost zero. It's almost zero, and your reward is gonna be back as your risk, as your reward, almost 1 to 7 or something. That's how powerful it is to trade the retests when things do not play out. Okay? When things do not play out in the normal, when your stop loss is very high, when it is risky, you're gonna revert to trading the retests. It's a second model and this is third model. Okay? Beautiful, isn't it? Yeah, it is. So buy, we are in buy, and the market kept pumping up. So finally delivered the TP3 upside, as you can see when you measure it. So you can see this is another block. This is another block. But this time only the lower prices are gonna be respected, since we already trailed our stops. this price will surely get us out of the trade. If we didn't move our stops and we entered up there, then surely it will get us out of the trade. But we took partial stamp. The same thing there, the same thing there, down there. But still we are expecting higher prices. We still want this market to move up. Why? We are still in a buy program. We didn't change a thing. Okay, we didn't change a thing for this one. For this black box, it is not changed. Look, it went a little bit. It took the low, but it didn't move any further. It bumped. So even in this choppy market, we will make the best out of it. So we got another black box with 1, 2, 3. When you see the fourth candle, only the first 3 are similar. What does that mean? I'm gonna delete the first candle and focus on the 3 candles. These 3 candles, the similar ones. Then what happened? We broke. Stop was up there. Sell. Sell. Okay. Sell. Then what happened? Price just after moving a little bit, it reversed direction, went upside and hit out. Right? What you gonna do now? What are you going to do now? Nothing. I will not buy this. Why? My stop loss cannot be down there. My entry cannot be up there. I'm not gonna risk that much. I wait for the retest. Okay. I'm gonna wait for the retest. So as you can see, that retest happened. This is a little bit later. The black box is found up there. And anything that comes there is a buy. Stop loss still up there. It is better than buying up there. This is better than buying up there. So first thing that I need to consider is there is a previous black box right around here that didn't hit TP2. So we found one here. This is inefficient. In both sides. It can go in either side and still be efficient if we trade TP2. And what happened? What exactly happened? We pumped. As a buy, we pumped. And then we measure the participants. TP2 is actually found there. But that's my entry level. I'm not gonna take profit up there. I'm only taking partial profit at TP3. Okay, yeah. So if you enter a retest, that is the best place. You can enter and you can take partials at TP2. Why? Because you are entering a retest. It would be best if the price had just come to the golden zone down there. And halfway of this week, it would happen amazing. But since that sort of thing don't happen often, so we have to revert to make ourselves comfortable with this trade. With the silver, so silver zone is also best. So after entering here, I'm gonna take partials at there. As pretty respective, I take 30% off. Then upset artificial another 30% off. That is 60% is out. And TP0 is net. What does that mean? It means I'm gonna put my stop loss at break even at my entry. Okay, at my entry. Since the price pumped up upside even further, you can put your stop loss up at TP2. It's okay. It is okay. It is okay. If we pump, the price is not gonna come down there. A little pullback and we will continue. Not all the time, though. Then another format. I'm not gonna buy this one. Stop loss down there, not gonna happen. I'm only interested for directional because to find my direction and to find my TP, the TP take profit. Okay. So what happened? It pumped a little bit. Now I am projecting this to the upside and waiting for a new black box. But it didn't offer me a new black box, so I'm gonna wait again. So finally it collapsed. Boom, change of direction right there. The program, change of program down there. The program now reverted back to the same program based on this. But based on this, we are still in a program. So even based on this, why it is still inefficient, it is not efficient. It didn't hit TP2 yet. Okay. Only TP1 is near the upside. So it dumped. Okay. It dumped. So now what are we gonna do? We're gonna wait for the black box. And we're gonna put our Fibonacci projection to the downside. So let's keep it right down there. So we're gonna find any black box along this way. Is there anything? No. Only right there we found one. And this is not tradable. No, this is not. As you can see, my stop was down there. My entry up there. This is not comfortable. I'm not comfortable risking this much money just to get a little bit. Not gonna happen. So I will use this as a directional indicator. So we have 3 directional indicators here. This black box, this one is already done, so it is X. This black box and around here, this black box, this one, and this one too. Maybe this one has it up there, TP2. Most likely that is TP2. As a reaction that sent this price down to down there to another retest. Okay, everything has a reason here. So the price just pumped up. And then now our best bet is to wait for another black box around here. Trade alongside of this trend. Okay, and then keep it up there. So up there will ride it upside. So that's it. Okay. Let us pump to the next one. It is the same thing as you can see, it's the same thing. And I wanted to show you this one, that's why I measured this one. We broke the downside, but we didn't hit TP2. So we changed the direction and we moved this upside at TP2 is near where? Right? Yes. Even to the downside it also hit TP2, so we don't really expect much from this. Because even to the downside TP2 is hit most likely. So as you can see at TP3, look at the reaction. It is crazy. Look, it dumped completely to the lower band, the lower of the previous window. So it is crazy. It's crazy how important this TP20 is. Then the rest is history, as you can see. There's nothing new. As you can see, TP3 held, then what happened? Down. Then TP2, what happened? Down. Look. Okay. Then for this one, TP2, what happened? Down. It is crazy how congruent they are, how they move alongside each other, they communicate with each other. So this black box TP2 is around the same area, is found around the same area with this black box TP3. And look the reaction. And that's TP2, and the TP3 is holding, bam, done. So it is nuts. It is nuts. The same thing here, there's nothing new. So let's find another one. Okay. We are around, say, almost halfway, so we are pumping. Okay, we're gonna finish this one. We'll finish this one. So what happened? Black was 1, 2, 3. Stop loss down there. Then there is no buy yet. No buy. We will not buy. Only use for TP projection. TP to upside. Then another one broke. 1, 2. The third one broke. That's a sell. Stop loss upside. Okay. Stop loss upside. Then almost immediately retrace back up and traded and formed another black box here. If you measure, we have actually traded 23.6 as 23.6% of the 2 candles. So it is valid. We can use this one as body and project the upside. Project it to the upside. Then what happened? The market reversed direction and hit our stop loss up there. I'm not gonna lie about anything. I will not hide nothing, bro. As you can see, it hit our stop. We are out of the trade with a loss. That's now in 3. Coming down there. Boom. And then okay, then what happened? This price started delivering upside. TP2, TP3 has the same area. It is nuts. It's crazy. Then we found another black box project that we didn't break the 2.5%, which means there is no entry. No entry. Only we broke the upside. That might be buy. That might be buy. Okay, that's it, buy. And then we were in a little bit profit. And then the market completely collapsed. So now this is a black box. Okay. When I measure the body, it's most likely TP2 is it, but actually, as you can see it, this is actually the third model. Why? We manipulated the upside, single fake out, dumped, retest, that's a set, because there is no black box before it. Only this one. That's a series. That's even in the silver zone. So, I mean the golden zone. That's beautiful. Okay. Then another black box formula. No enter. It didn't break nothing. It's tried to break something. It tried to break something, but as you can see, it didn't. The retested. I'm sorry, what is happening to me? What the hell is happening to me? So as you can see, we focus on these two countries. These are similar. So we focus on this and that's a sale. That's a sale. And profit, taking time, we take profit. We take partial profit, right? In the financial market moved up. So stop loss is a little bit weird. It is high risk. It's high risk. So actually we took partial profit, and then market reversed direction moved up. So if you give it a closer look, right there, the 2.5% was not touched at all. 2.5% was not touched at all. Okay. What does that mean? It means that this is our black box. I bet you didn't see it before I showed you myself, right? You be honest. You oversaw, you overlooked it. So right there is a black box. Why it overlapped completely at least halfway. Then this thing trailed at least halfway. That's amazing. So the project is the downside. Why? We go to the downside now in the same program. Don't forget that. Okay. Every attempt to move out is a selling opportunity. Why TP2 is TP1, TP2 is downside. So we expect this price to dump to that TP2 to gravitate. Okay. Do you get me? Of course, we lost money on this one, on the buys. We lost money on this sell. That's for sure, right? We lost money. But what we didn't lose is this body, TP1, TP2. Right there is a sale. Right as a wick. Since the whole thing is a black box now. Inside this is a selling zone. Even that one is a sale. As soon as it starts making a wick, that's a sale. Okay. 2.5% is not even touched. Then the price dumped. I know. This is on the hindsight. It's simple, okay. I mean, I know what happened, so I'll try to fit it with. I'll try to agree. I'll try to make it agree with the chart and what I'm talking about. And hindsight is simple, right? Yeah, it is. Yes, it is. Yes, it is. But when you differentiate what's happening, when you recognize what's happening, what's gonna happen, and what happened in the past, you will avoid risks, you will avoid these kinds of things. Okay? You will avoid, as you can see, that was a loss. Even in hindsight, I didn't try to coverage is sale. This is a sale. There is no coverage here. I'm not gonna cover any secret, any shit here. That is a buy. My stop loss down there, and it was hit. So I lost in both ways. So now I found another black box and TP1, TP2. So this is gonna be this loss, and this loss is hopefully will be covered by swap. Since as you can see, that's my stop loss up there, my entry, stop loss the same thing up there, and another entry. I am not gonna enter down there. As you can see, stop loss that is huge. Not gonna do it. So I'm gonna trade the stop loss. I mean the third model or the second model. That's actually the second model right here. Okay. So after that, my money is back. So this thing, I'm expecting this thing to dump. Okay. Then I found another black box. Sell, take partials up there, and then first you determine your risk. This is a risk. Are you gonna take that much risk? No. If that wick was not here, I would have entered the trade. Since that wick is above there, not gonna happen. It will add a lot of risk to my exposure, my trade interest. So I'm not gonna risk that much. So I'm already in a sell trade up there, so that's the best price ever. The next, this thing happened. 1, 2, 3. Did we break? No. Then another candle. I want the unknown candle here to trade at least 23.6, touch it and dump. So I will target down there. So I will have 3 trades. Sell. Okay. So I am showing you this. There, the golden zone is real. Oh, it is real. It is real. What does that mean? The place between my stop loss and the black box is called the golden zone. This area. So that space above is a hunting area. That's a battlefield. That's why I'm away from that area. So they took the higher look. They dumped. Okay, that's still the same. It will give you a huge risk to that's your stop loss. Your entry will be there, almost no risk at all. So virtually no risk. So it's beautiful. So this is our next trade setup. So I will show you in the next one. This one okay, almost 1 hour. So I mean 15 minutes. So I'll show you in the next one. Okay, thank you for watching.